Hello, everyone. Welcome back to my weekly series of price action based technical analysis. In this edition, we will be exploring potential trading opportunities within the GBPUSD market structure. Despite the 0.2% growth in the United Kingdom's economy, which was, of course, beyond expectations, the pound sterling is still struggling to gain traction as trading activities have remained range bound in recent weeks. Before we proceed, remember that this video is for educational purposes only. My aim is to provide you with valuable insight into the GBP USD chart and at the same time enhance your proficiency in price action analysis. Remember, trading requires caution. Always consult an independent financial advisor to evaluate your unique situation before making any investment decisions. As we prepare for the upcoming week, I have conducted a comprehensive price action based technical analysis on the cable market structure, utilizing simple parameters such as trend lines, key levels, and of course, chart patterns to gain valuable insight into the historical price movement of this market. The previous week witnessed market uncertainties with price action confined within a range. This limited our ability to capture significant pips movement as price action consistently snapped back into our specified entry zone, as you will be seeing in this commentary here. If you are eager to explore this for educational purposes, you will find the link in the description box below. And for you watching on my YouTube channel, the link is conveniently situated at the top right hand side of your screen right now. With our foundation in place, let's dive straight into the art of the matter. Well, to prepare ourselves ahead of the new week, I want us to revisit the daily time frame where I want us to look at things from a long-term perspective. So, on the daily time frame, the first thing I was able to observe here is the fact that price action has remained bullish at least in the last 7 months now. And to further emphasize the strength of the buyers here, I was able to connect a series of higher lows to give us this a couple of ascending trend line actually, which has been supporting this bullish momentum for this long specified period of time. Then, in addition to that ascending trend line, is that key level I was able to situate along the 1.26700 area, which of course has been a major determinant of price action since the month of May. Now, if you look at this closely, you will see how this level was initially a selling niche that was during the month of May before it was broken out of and retested a couple of times within the month of June before that huge bullish momentum indeed broke out of that structure to find a new high at the 0.31400 level. I think that was a mistake here, so I will just correct the typographical error there. And since then, we have seen price action drop back into that key level in the last couple of weeks. And since the price dropped into that area, we have noticed a level of uncertainty in this market, hereby making things a little bit complicated within this area. Now, with this groundwork laid, that is an ascending trend line and a key level, what makes this whole structure very interesting is the fact that price action is back into the key level. And of course, one of the ascending trend line that has been supporting this bullish momentum in the last 1, 2, 3, 4, 5, 6 months now. The question at this point in time is, will price action respect this ascending trend line and the key level one more time to incite an uptrend continuation? Or are we going to be seeing a scenario where the breakdown of both the key level and the ascending trend line will incite a sell off in this particular market? Now, you would agree with me that we're at a crucial point in time in the market where there is an equilibrium between the buyers and sellers, and any significant breakout or breakdown is likely going to be dictating the pace in the coming weeks. Now, in order to help us guide our trading activities for the upcoming week, I was able to identify a simple setup that I will be sharing with you on the 4 hours time frame. But before we go into the 4 hours time frame, I would like us to um, visit the economic calendar to check what majority in the market will be looking forward to from the fundamental perspective. And of course, we all know that these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, hereby giving us enough information to position ourselves in such a way that we can capture that potential trading opportunity prior, during, and even after the event. So on the economic calendar, we shall be focusing on high impact events from economies affecting the currency pairs that we are looking at, which is the United States and of course the United Kingdom's economy. So the first high impact event is coming in on Tuesday, August 15, and that is from the United Kingdom's economy. And this is the claimant count change, which is a measure of the change in the number of people who are claiming unemployment related benefits. And one thing about this indicator is that it gives us an insight into the health of the labor market and can influence trading decision, as a decreasing count may suggest improving job market condition, potentially impacting currencies and equity markets. Then the next one is the retail sales from the United States. And of course, this is a measure of consumer spending on goods, and it indicates the health of consumer demand and economic activities. Then on Wednesday, we have the consumer price index, which is the average change over time in the prices paid by urban consumers for a basket of goods and services. A rising CPI indicates inflation affecting currency value and interest rate expectation, thus impacting trading strategies. Then we have the FOMC meeting, of course, which is the summary the summary of the FOMC minutes discussion and decisions of central banks monetary policies meeting. Then on Friday, we have the retail sales from the UK, United Kingdom's economy too, as well. So these are very high impact events. And of course, the anticipation of this event will be reflected on the chart as price action. Now, talking about price action, let's go down into the 4 hours time frame where we shall be looking at the simple setup I was able to spot here. Now, on the 4 hours time frame, looking at the span of about 7 weeks now, I think, you will see that we have that demand zone, which is situated about around the 1.265 area, which I already emphasized with that key level on the higher time frame earlier. You will see how, as soon as price gets into the zone, we saw how sellers have struggled. Look at what happened here at the beginning of the month of July. We saw buy pressure negating all selling attempts. We saw what happened here during the second week of July. And then we saw what happened here at the beginning of this month. And since then, we have continued to see buy pressure around this area. Will sellers continue to find it difficult to break through the structure going into the new week? Well, the current structure will give us an answer to that one. Now, in addition to this, is this descending trend line, as you will see here, since the mid month of July, price action had consistently found lower highs where a the appearance of a new low will be what we will be looking out for to confirm that price action will be going bearish. But as long as this 1.26700 area continues to be a barrier for sellers, it will not be a reasonable thing to buy anywhere above the 1.267. So for me to consider selling the GBPUSD for this week, I would want to see a breakdown of that key level at 1.267, probably respecting the ascending trend line like a retest of structure to give me that confidence to join a bearish momentum in the coming week. However, if we are going to consider buying the GBP USD, the only condition or criteria that will give us the confidence to join a bullish momentum at this juncture is to see price action break out of the 1.27800 level, which of course also shares a confluence with that descending trend line. And of course, we know that once a trend line is broken, a descending trend line is broken, it's a clear sign that the trend line may no longer have the capacity to continue to negate that bullish attempt. So a breakout retest of structure will be a beautiful opportunity to join an uptrend continuation. So these are my views here on the GBP USD for this week. But trust me, I will be with you in the comment section on Monday morning after monitoring our participants in this market will be reacting to this current zone during the first couple of hours of the new week. I hope this video has been of immense help in making your independent trading decision for the coming week. And if it did, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you will always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.